Hello traders, good morning, good afternoon, good evening. Hello traders, good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW traders. For Fibonacci trading, our website is www.dayprotraders.com. Today is the 9th of February 2014, and the time in London is 43 minutes past 11 p.m. In New York, 43 minutes past 6 p.m. The title of the video is how to recognize the best Fibonacci trade setup. In this video, I will show traders how to recognize the best Fibonacci setup. What do you need to look for, okay? What do you need to verify? What do you need to pay attention to detect or to identify the best Fibonacci trade setup? All right? Okay? Very often, traders get into trouble when they are using the Fibonacci tool because they are using the Fibonacci retracement level, okay, as a magic level, as a science, and they get into trouble. They do not take a valid signal, okay, when the price reaches, okay, a Fibonacci retracement level, okay, either 38.2%, 50%, 61.8%, or 78% Fibonacci retracement level. In this video, I will clarify, I will show traders what you need to pay attention to detect clearly, all right, the best Fibonacci trade setup. On this chart of, Regeneron Pharmaceutical, American stock listed on the Nasdaq 100, EPIC REGN, Romeo Echo Golf November. We are on a daily chart, and on this chart there is a very beautiful Fibonacci trade setup. Have a look. I'll let you see the chart for 1 minute, all right, or 30 seconds, and see whether you can detect on this chart one of the best Fibonacci trade setup, and also why is it one of the best trade setup. You want to understand. If you understand, you'll be able, okay, to detect it consistently. But you can recognize a setup which can be profitable. But if you do not understand, okay, why this is, okay, one of the best trade setup, why this is the best Fibonacci trade setup, if you do not understand it, you can, okay, go round, or you may use it one day, and the next day you will fail to recognize it. All right? So let's get started. All right? The first thing we want to analyze, if you want to use the Fibonacci retracement level, is to analyze the retracement itself. So you see the price was bullish first, and then it pulled back. This is the pullback. So what you need to analyze first is the retracement, how the price came down. Very often traders use the trading volume to analyze how the price goes down. So they may say the price pull back on low volume, and sometimes they probably do exactly that, but may not change direction after the pullback on low volume. Why? There is something else that we call the price structure. Traders who understand the area wave will understand that what we meant by the price structure, or the language of the price. The first thing you need to memorize or remember once and for all in this video is that the minimum price move is free. 1, 2, 3. Minimum price move is free. The best Fibonacci retracement level will come down in 3 moves. As you can see, the retracement from here to here was divided into 3 moves. Okay, where are they? I'll show you. So it went down first like this, and then went up a bit, and then come down in 3 moves. As you can see, the price was very bullish, And then it came down, the retracement was in 3 moves up to the 61.8% Fibonacci retracement level. So one of the conditions to dictate the best Fibonacci trade setup is that the retracement, very often the best Fibonacci trade setup, the retracement is in 3 moves. So now you know it. So look for it. What is happening, traders are very often are looking for the retracement in 1 move, so like this. So they will buy here at 50%. As you can see, traders who bought it at 50%, the price went up a bit, only to come back down. Now, so the first thing we are looking for to detect the best Fibonacci trade setup is that we want the retracement to be in 3 moves. This is the one thing we need to know. What is the second thing we need to know? Now, I told you to analyze, okay, how the price came down, how the price retraced to the Fibonacci retracement level. So it came down in 3 moves. The next thing is to analyze and compare, repeat, to analyze and to compare each move. So it came down in 3 moves, which is one of the conditions to dictate the best Fibonacci, okay, trade setup. The next verification is to analyze each move individually and to compare them. Especially, we want to compare the first move and the third move. The best Fibonacci trade setup, very often you see that the first move will be longer than the third move. This is one of the best Fibonacci trade setup. Now this is free, and I do not charge you for it because you're my friend, and I'm sharing with you. Why am I sharing it? I'm sharing it for free because we want what we call an orderly market. If 70% of the market participants are intelligent, so to speak, all right, talking about intelligent investors, intelligent traders, understand the language of the price, understand the market pattern, understand the market principle, ladies and gentlemen, you will notice that the majority of market participants will be profitable. But what is happening right now in this messy market is that more than 80% of the market participants do not understand the language of the price, do not understand what is a market stable data, do not understand what are the market principles, they don't even know the 3 market patterns. This is where we get into trouble. And other market participants can make intelligent market participants lose money. This is messy. It's a competition. It's like a football game. You have some crazy players, and they can tackle another player and hurt them badly so that they cannot play the next day. Though the trader that gets injured is one of the best players, okay? The crazy player has taken it out of the game. The same thing is happening in the market. We see crazy market participants messing up other traders' trade. That's why we are sharing this for free. So if you like this video, we will highly recommend to traders to be busy sharing this on Google+, on Facebook, on Twitter. Share with your friends, share it on your website, so we can have more orderly market. So we want to see the price come down in 3 moves, and we want to see the first move longer than the third move. Why? Why? Now, think of it for a second. Do you find the answer? Why? Why? If, look, ladies and gentlemen, if the price move from A to B like this, all right, and pull back like this, without cancelling the prior impulsive move, the prior bullish move, or the prior bearish move, it didn't cancel, it coming all the way here, and the price, repeat, and the price changing direction here, okay, is very bullish. Very bullish, all right? But as the price start going up from here, this is an invitation to buy. If the price failed, for instance, here, you see, this is 3 moves, isn't it? First move, second move, and third move, isn't it? Now, this is an invitation to buy. If the response at this point could not achieve the same length as it did here, it's a weakness. So for instance, the price now found a support here and start going up here, but couldn't go up as much as it did in the first move here. That's a weakness. We look for opportunity to sell. It's just the language of the price. Very simple. They are not enthusiastic to buy as they were before. The momentum has changed. If the price couldn't achieve the same distance as it is, the same momentum as it did here, is a weakness. All right? Now, I don't want to dwell too long on this. So this is a weakness of a bullish move. The same thing, as the price pulling back, you see, it went down big time like this. Now, this is the invitation to sell again. Now, traders sold it, but they could not achieve the same result as they did in the first move down. And the price reaching a Fibonacci retracement level, remember what I said, and will receive a signal to buy here. It doesn't mean you touch it here and then you jump on it, force it. That's not the right way. Remember the first rule in Fibonacci trading. Watch the video on YouTube. Check our YouTube channel, Day Pro Traders channel. First rule in Fibonacci trading. Do you know it? Go and check the video. First rule in Fibonacci trading. Or go to www.dayprotrader.com. All right? Do not assume anything. And as always, the trend line here must be kaput. So, because the first retracement down was very long, and then we have this small rally, which is an invitation to sell, but people did not sell as much as they did here, and the price changing direction here. As soon as this trend line is broken here, we will buy. It's just very simple, and this is the language of the price. If it happened to be a losing trade, we won't feel emotionally connected or even think of it. We know that we understood the language of the price. We will buy here. In this case, I will use a multiple time frame trading method because I'm on a daily chart. I will not enter a daily chart. I will use a multiple time frame trading method to enter the trade. So to dictate the best Fibonacci trade setup, we want either a bullish progression followed by a retracement in 3 moves. The first portion of the retracement should be longer than the third part of the retracement. I'll just share with you one of the top secrets that a professional do not want you to know. Now, I have also explained to you the meaning of this strategy. So, not only you know it, you know by your head, but you understand with your heart, isn't it? Now you understand why this is, one of the best Fibonacci trade setup here. The low risk entry point is above this trend line here. If one is buying here, one must pay attention to this trend line here. But the best low risk entry point is here. Talking about a trading drill, this is a setup. Wait for the signal and enter the trade at a low risk entry point. Trading drill, the setup, the signal, and the low risk entry point, without violating the market principle. So there was a bullish progression. This is very important for us. All right. So you want to be bullish. So it was very bullish before. We want to know what's going on. So the price does not hide anything. This is a market stable data. The price does not hide anything. It was bullish, yes or no. So you can see there was a consolidation and then breakout, boom, 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 up. Nice market progression. This is a horizontal market pattern. This is an imbalanced market pattern. So the price ran fast. So it's bullish. So now we are watching it. So you have Fibonacci retracement trader. So yes, it's pulling back like this. People jump on it at 50%. This time it didn't change direction anyhow. But the best Fibonacci trade setup, the price will come down in 3 moves. And we want the first part of the retracement should be to be longer than the third part of the retracement. As you can see, the price retrace up to this is one of the best Fibonacci trade setup. Now you know how to recognize the best Fibonacci trade setup. The pattern that we are looking for, very strong move. We want to understand where we are, what is taking place. Some new traders may get into trouble because there are other things that we talk about, multi-talented trading. Now, talking about multi-talented trading, we understand the Elliott wave theory, we understand the fractal pattern, we understand the market cycle, all right? So there are more things about this. But with this information, you'll be able to avoid a lot of Fibonacci trading mistakes and to detect the best Fibonacci trade setup. So the pattern we are looking for is something like this, okay? And the third part to be shorter than the first one. Now, this is the setup. We'll use a top-down trading method to enter the trade. If you jump on it and force it, as soon as it reaches, it slow down here, start buying and say, this is it. Use a multiple time frame trading method, because the price can go down more. Until you receive a buy signal, do not buy because you see the pattern like this and the price slowing down. It may slow down for some days and then continue to move to the downside. Wait, you can see here, this is a patient move. We see 1, 2, 3, comparison, first to the third one, everything aligned clearly. Just wait, we are here, right now, right place, and the right time. The low risk entry point, we can use the TSCWSY 008 to enter the trade here and cream the market. Price going up, this is the first target level right here. In normal condition, all right, as the price pulled back to the 61.8, trader will say the price has a high chance to go to the 127 Fibonacci extension level. That's the horizontal orange line here. That's where the price went to. But it didn't go there, it won't go. You can see that as it was going up, the first target is the previous high right here. You see, previous high. Always don't be too greedy. All right? Take profit consistently and manage your trade. So we know that the ultimate target in theory, all right, the theory and the reality of the market can be completely different. Now, the price does not have to reach the target. Now, we must, I need to mention this now, because some traders are pure technical traders. It's not all about technical. Use Google Finance, use Yahoo Finance, check the balance sheet, all right? Check the economy news, check the management. The economy news, talking about the trading triangle. This is the difference between the professional traders and the ordinary traders. Ordinary traders are rushing, using different sort of technical tools, but they don't want to apply the trading triangle. Check for the video that we post on YouTube, the trading triangle by George Trio. All right, check it out. Understand how to use the trading triangle and the multiple time frame trading method. They set up the signal and low risk enterprise. So here, as the price going up, okay, we know that, okay, target, in theory, 127% Fibonacci extension level. Will he reach it or not? Until he reaches, all right, until he reaches. So here you can see as he was coming up, resistance, just first and nearer resistance level, that's your first bullish target zone. First and nearer support level, that's your first bearish target. They took profit. Price pulled back again, and then ran, and now you see, he hit it here. Now everybody came out, the price slowing down here. This is one of the best Fibonacci trade setup. And this is the pattern, a very strong bullish progression. 1, 2, 3. First part, longer than the second part. Use a top-down trading method, and the low risk entry point is after the trend line here is kaput, and you receive a buy signal. It makes sense? It is also powerful. All right? There are many examples here. So here we are. Always we are analyzing the price and see what the price is doing. You remember what I said to you about the tree move? That if the price go up from here to here, and it pull back, this is an invitation to buy, and the price fail to achieve the same momentum as it did before, that's a weakness. Do you see one on this chart? I can show you. It's happening all the time. On the daily chart, on the hourly chart, on the 4-hour chart, we can clearly read the price, understand what is taking place. Can you see this one? Can you see how it came here? So he was very bullish, then he pulled back nicely here, and then he changed direction on the daily chart. This is an invitation to buy. Look, as he was going now, he couldn't achieve the same level as he did before. The trend line here is kaput. The common sense trend line must be broken. Don't force it, okay? Now, I'm speaking like this to get your attention. It's not to annoy you, okay? So don't smash your computers, okay? All right, so this is a good sell signal again here. Okay, so very powerful, and I hope you have learned something for this video also. Okay, I will put it to use, okay, to make excellent trading decision. This is about how, okay, to identify the best Fibonacci trade setup. If you truly like the video, okay, like it and share it on Google Plus, on Twitter, and on Facebook. Okay, your interaction is very important for us. If you have any question, put it below. If you are a TST trader, please contact us, all right, and we can discuss more about this. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.